TV18 Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, morning.
How's the weekend?
Too short.
It felt like I just saw you guys like a couple of hours ago. Yeah, you need to disappear for longer on the weekend.
Nigel, that is a serious suggestion, huh? I mean, for us.
After Friday comes Monday, guys. I don't know where that weekend disappears.
I don't know who you want to hang out with, Sonia, but we are happy hanging out with you.
Yeah, we'll hit lower circuit. Otherwise, I mean, the entire market saying we want to be in touch with Sonia Shenoy and Sonia Singh. All right, let's
get... The weekend needs to get a bit longer.
Yeah, right? And you must have been enjoying your weekend, and out of nowhere, this Motherson Sumi news came as well. So big acquisition, so
by
busy.
The way, on the point of we need longer weekends, Sonia, we're talking about there's a lot of buzz. I don't know if you've read these tweets saying NSE is going to extend the time to 5 p.m.
I read that.
Right.
I ignored it.
It's going in the opposite direction. But we'll see, right? Fingers crossed. All right, let's get this ball rolling and tell you how things are set up this morning. I mean, we actually are picking up exactly from where we left off on Friday. There isn't very much which has happened over the weekend which should change the outlook one way or the other. So we are starting a new week with absolutely mixed kind of cues. And I'll tell you why. Number one is basically what we emphasized on Friday as well, which is the fact that the very strong US economic data, which we've got starting from the jobs number 2 weeks ago, then the consumer price inflation number, then the producer price inflation number, the services data, it undermines the Goldilocks narrative. What is the Goldilocks narrative? It is simply a point of view which markets had made themselves believe that maybe data will not be too hot, too strong. It won't be weak, but it won't be too strong. It'll be just right, which will allow the Fed to back off. But the data is coming in very, very strong. And that's why I'm saying it undermines the Goldilocks narrative. And the main fear that markets have is that, all this strong data will require a lot more in terms of Fed action. Actually, James Bullard, he's of course known as a hawk in the FOMC. He, on Thursday, said that maybe we should go back from 25 to going back to doing 50 basis point hikes. Now, that may be one view, but even the fact that people are, and these are voting members, are talking like this, I think, is something which the market is paying attention to. All right. On Friday, in the US, the price action was interesting. Equities bounced off the lows. Yields came off the highs, and the dollar index also slipped a little bit from the highs. So this is constructive price action. I mean, equities were lower, to be sure. Over Thursday, Friday was down for equities in the US, but we pretty much ended at the best levels of the day, at the highs of the day. Same is true for yields, which slipped about 10 basis points from the highs, and you had the dollar index, which also slipped from the highs as well. Could be some position clearing. It's a long weekend, by the way. Monday. Today is a US market holiday. So in that sense, we don't have cues out of the US for later today. But we had a little bit of sort of reprieve from rising yields, rising dollar and falling equities. In any case, let's just come to levels here in India. So on Friday, the Nifty closed exactly around 10-15 points in the vicinity of the 40-day exponential moving average, which stands at 17,951. We left off at 17,944. So we basically closed almost exactly at the 40-day exponential moving average. That kind of becomes the pivot. I mean, you get a big gap up that acts as a support. You get a sell down that acts as a bit of a resistance. A move above the recent high of 18,135 should give some confidence. Let's see if you're able to do that during the course of any attempted recoveries. The Bank Nifty on Friday did far worse as compared to the Nifty. It broke last Monday's low, which is the recent low of 41,158. We left off on the Bank Nifty at 41,131. The next support for the Bank Nifty comes in at 40,699. That is nothing but the 50% retracement of the recent up move. That is from the 30th of January to the 16th of February. This, I mean, if you do a retracement, we are the 50% retracement comes in at 40,670 or so. On the upside, the 20-day sort of for the Bank Nifty comes in at 41,436, and then you've got the recent high, which is at about 41,179. But this morning we are coming into this new session, new week, with, as I said, what we left off the market like on Friday, but little else in that sense. So I think, we'll have to wait and watch for cues to pick up. Earnings season is behind us. That has not been particularly helpful. So we'll see. Guys, hi.
There's a lot to watch out for this week as well, right? There's F&O expiry, so we're going to look forward to that. Apart from that, as you said, the hawkish Fed speak is something that has put a lid on the market gains, and that's why the Nifty is facing a bit of a hurdle at that 18,000 mark. So that continues to be a resistance for the market on the upside. Now, this morning, the SGX Nifty is suggesting a very quiet start. So it's just about 20-30 points up in the green right now, okay, 32 points higher. But if you looked at the flows on Friday, both foreign and domestic investors sold in the cash market. So FI sold about 620 crores, DI sold about 86 odd crores. And although the Dow ended in the green on Friday, it's been the third straight week of losses now for the Dow. Of course, the Fed's speak has been on the hawkish side, and that has put a lid on the market gains globally as well as for our own markets. So as I said, the Nifty is now facing that resistance at 18,000. On the downside, it's approaching the 20 DMA of 17,855. So these are two levels that I'll keep on my radar, 17,850 to 18,000. That's the kind of a range that I'm looking at. A lot of stocks in focus, so we'll talk about that in greater detail. But there is a semi-annual index review by the FTSE. And in that, there are a couple of stocks, Kotak Mahindra Bank, Patanjali Foods, IDBI Bank, have been added to the all-world index. So I'll just keep those stocks on my radar as well. But all in all, you'd have to say that it's going to be a pretty interesting week because there's, of course, the F&O expiry. Today, the US markets are shut later in the evening, so no cues from there. But largely, the market has been really range-bound. The F&O positions are also a net on the short side. So there's a little bit of on the back foot for the market. Let's see which way it goes.
Well, that's right, Sonia. It appears we're in a bit of a band. You're the 250 to 300 point band on the downside at 17,850, and on the upside, the recent high that we saw. Reliance, well, that's been a big outperformer, actually. Just take a look at the last 5 trading sessions. The stock is up close to around 4%, and the Nifty is more or less flattish. So you'll say, hey, we're not breaking down, but we're not breaking down because one big component of the index, it seems to be finding its rhythm. So, Reliance Industries will be crucial, but it will need the Nifty Bank to support because that's been doing a relative underperformance over the last few sessions. So the Nifty Bank will have to come in there, play a bit of a support role to Reliance if we have to break on the upside. The IT index, so that's the Nifty IT index, that could remain a little bit subdued. And I say that because, in fact, the NASDAQ seems to have lost its way a little bit in the near term. And that's because of the rising yields, this Fed talk, which is quite hawkish, that's a little bit worrying. What are the FIs doing in the F&O market? Well, they added close to 10,000 short contracts. They unwound some longs as well. Close to 1,600 long contracts were unwound. That takes the short positioning now to around 77%. They bought close to 1.5 lakh calls as well as puts, so no big direction coming out of there. But what's telling you that at higher levels we're going to see a lot of selling is because they wrote way more calls than puts. More than 2 lakh calls were written, and we're getting to expiry day. What are we working with in terms of the options that were active? 18,000 call, 17,900 call. Just take a look at that. Between them, they added close to around a crore shares. So there is aggressive writing that we're seeing at higher levels out there. And the 18,000 call, by the way, the total open interest is more than a crore now. On the Nifty Bank as well, the 41,500 call, well, that was fairly active. It added more than 30 lakh shares. So there was some writing that we've seen out there, pocketing a premium of close to around 200 rupees, which brings us straight to the levels. Supported around 17,850. That's because, in fact, we have the 20 DMA in that vicinity. Resistance 18,080, and I say that because the 18,000 call was getting written. And on the Nifty Bank, you're facing resistance at around the 100 DMA. That comes in at around 41,700. While on the downside, we bounced off 40,850. So that's why I'm watching that as a crucial support zone. SGX, if we're suggesting a gap up, I think that gets sold into some point of time. We're in a bit of a range. The crucial part will be, can we break out of the range and the levels that we put up for you, on the screen?
Absolutely. And I think there is this overarching fear that the rate hikes would impact demand, right? Yeah. You're seeing it with Brent as well. Brent has fallen to, I think, $83 a barrel because that's the fear that, the inflation fight is not over just yet. The US Fed's targeted inflation rate of 2% may not be met anytime soon. At least that's the view coming in. So you've seen a fall in Brent on the back of concerns that higher rates would perhaps impact demand. But lots lots to talk about, so let's get the views going in straight up. First up on the equities front, you have Chetan Seth of Nomura, who says that peak rate expectations have risen significantly since strong US non-farm payroll data, which has also led to renewed dollar strength and higher US bond yields, both of which are not good for Asian stocks in general. There's now significant uncertainty on the near-term US data, given recent data surprises, which has caused an uncertainty around inflation with the outlook and thus the Fed policy outlook. In the near term, Asian stocks will not like this uncertainty, and thus Nomura expects some volatility until a trend in the data is formed again.
Okay, let's get you some money market views as well. This is B. Prasanna, who weighs in on the rupee. He says that globally, broad-based dollar strength continues to deter stronger than expected economic data and hawkish commentary by Fed members. Back home, improved current account deficit and balance of payment outlook, along with a favorable seasonality, will support rupee in the near term. Prasanna expects the rupee to trade in the range of between 82 to 83 to a dollar range with an appreciation bias.
Okay, and on the bonds, V. Prasanna says that the bond yields continue to remain under pressure as higher inflation prints and stronger set of growth data resulted in expectations of higher terminal rate, both globally and locally. He adds that a favorable bond demand supply outlook for the remaining part of the fiscal is expected to keep Indian bond yields range bound, with the benchmark 10-year trading between 7.25 to 7.45%.
All right, well, we have a lot of stock-specific action for you, and we'll get to that in just a bit in our special Top 10 segment. We are looking at Samvardhana Motherson, Precall, CRISIL, KEC, Power Grid, Supreme Industries, Benar Industries, and RITES. They are stocks on the back of positive news flow, while we have Cipla and United Breweries that could react to the negative news flow of the weekend.
All right, those are stocks with news and results, etc., which we'll get to in just a bit. But Arvind Sanger is our global guest to get a bigger overall perspective, managing partner at Geosphere Capital. Arvind, it's always a pleasure. Great to have you with us here. Thanks very much. Markets are back to trading like, someone cancelled the Fed pivot. Oil is down, yields are higher, dollar is stronger, equities are lower. Just put this into context for us. And, between when we saw peak hawkishness, etc., and where we are now, one was bound to see this changing views and volatility, etc. So I guess that is playing out. But is this the start of something new? Or you think we are in the midst of one of those kind of confusing market phases right now?
Well, look, I've been of the view that Goldilocks was a lower probability and that inflation was going to reappear and people were getting too optimistic, and it was a bear market rally. And I remain of that view that the last couple of months of hope that somehow inflation was going to magically disappear. Look, inflation has come off the highs. That part is over. The question really is inflation going back to the levels that the Fed hopes and wants it to come back to, which is, in the 2%, 2.5% range. And I've been of the opinion, and that the recent data confirms it, that while the goods inflation has come off sharply, services inflation and other factors that are more sticky are going to make the job harder. And therefore, if you ask me today, where do I think Fed funds rates could go? I think the Fed fund rates could end up at 6%. I don't think that's outside the realm of possibility at all in terms of what it will take to bring inflation to a level that the Fed will be comfortable with. Therefore, I think that the market got a little too optimistic too quickly, and I think we're facing that. And India had inflation data that surprised a few days ago on the upside. So this is not just a U.S. phenomenon. This is a phenomenon around the world, that inflation is coming down, but is proving stickier on the way down than people had hoped, the central bankers had hoped.
So what does all of this mean, Arvind, for a market like India? Because, the narrative is that it's going to be a painfully frustrating year for Indian investors, where because of the higher rates, the market is not going to move anywhere, and perhaps you could even see a time-wise correction. Is that your prognosis too? And if yes, how does one approach it?
Well, I think one approaches it with patience and with being willing to pick individual stocks at levels you want to own, because the reality is there are two or three things that have created headwinds for India. One is obviously, as we all know, the Adani story has caused some money to leave the market. The second is China reopening. I think that's been a big factor. India was a big beneficiary last year till late in the fourth quarter of China, shooting itself in the foot with its own zero COVID strategy. And as that is unwound, China has gained, and other markets, India was one of the biggest winners in emerging markets, have lost. Nothing wrong that India is doing, but it's a little bit of giving back for some of the benefits last year. And the third now is obviously the persistence of inflation. And so I think, yes, it requires a little bit of patience, but I don't think the Indian growth story, medium or long term, is broken. I think the stocks have gotten a little ahead of themselves in terms of valuations, and the earnings need to follow through, and it'll take a few quarters for us to get to where the market and the multiples and the valuation make sense. Because in a 6% Fed interest rate environment, PEs around the world, not just India, PEs at the S&P and others are reflecting a much, much more benign discount rate. And I think that if we use a slightly more, higher discount rate, then PEs need to reflect that reality.
All right. Hi, Arvind. Morning. I recall, when you joined us at the start of January, you were telling us that since the China reopened trade is a big factor, maybe energy as well as metal stocks could be on the buy list. Do you hold on to that view, or have you seen that post the new year, the China reopening is not as robust as expected?
Well, look, I never said that China reopening will happen in January and February. I said as we get past Chinese New Year towards the second quarter, we will see it. Metals and mining stocks, are up about 6.5% year to date. So last year, energy was the leader. Metals and mining was the laggard because China is much more important to the metals and mining sector than to energy. This year, I think that metals and mining will continue to see more response as we go later through the year. But keep an eye on China's revenge travel. I think that's coming in a big way. Forward data on travel and everything else is showing that there is data that China had pre-bought and put on tankers a lot of oil from Russia that they didn't need last year while the lockdowns were taking place. So some of that is being drawn down. But recently, one important data point is that VLCC, very large crude carrier rates, have started to move up contra-seasonally quite strongly. And if that continues, that's a sign that China's demand is starting to reemerge on the oil side. So I've not at all written off the oil side. In fact, I'm keeping a very close eye on the tanker rates to see what's coming. So my view is that, yes, China will be a factor. China was a factor in driving inflation because of supply chain challenges 12 months ago. In the last 12 months, those have come back. But China could be a factor in driving some commodity inflation as we go through the year. And that's something we're keeping an eye on.
So if you do believe that the India story is not broken just yet, despite higher rates and slower growth, where do you see opportunities for Indian investors now? Is it in the IT space that's still struggling to recover a bit? Is it in banks? Where do your preferences lie?
Well, look, banks were very popular last year, right? They worked great. So banks are seeing a little bit of profit taking, as we can understand. But, we find selective opportunities in banks that are not gone away, because again, in a cycle which is going to be recovering, I think Indian banks will be well positioned, but we need to be selective because some of the valuations have run a little bit. So again, selectively we are buying banks. We still like domestic and infrastructure and other spending-driven beneficiaries. We like companies in the power and related. We think that power demand in India is going to be extremely strong, and we think that the underinvestment in anything except renewables is going to continue to create power crises in India because renewables can help you during the time when the sun is shining and the wind is blowing, but otherwise there's going to be issues. So that's an area where we think investment is going to be needed and opportunities will exist. And then, selective companies across sectors we see, but we think that, the IT sector is one we're not in, we're keeping an eye on, but, it's somewhat dependent on U.S. economic outlook. And if we think a U.S. recession is coming, maybe we need to wait till a little bit till buying that.
Okay, always a pleasure speaking to you, Arvind. Have a great day and a great week ahead. Thanks a lot for joining in and speaking to CNBC-TV18. Well, that's Arvind Sanger saying that the India growth story is not broken just yet, but there are pockets like IT which they're not yet touching. They're still a bit wary considering that we could be heading into a US recession. Let's take a quick break on that note. On the other side, our entire research team joins in to help us with the top trades for the day and the top stocks in the news to watch out for as well.
Welcome back. Hope you're having a good morning. Well, in the last few minutes, the SGX Nifty suggesting a little bit of a better start because it's up close to around 40 points as we speak. But there are plenty of stocks to focus on, and our research team is standing by with CNBC-TV18's top stocks for the day. Well, Sonia, there was an acquisition that came overnight. Samvardhana Motherson looks good, right? 5.3 times EV per EBITDA.
It looks good and it looks big. Finally, there's a sizable acquisition that Samvardhana Motherson has made. So let me just take you through the acquisition details. The company has acquired 100% stake in a company called SAS Auto System Technique. Now, SAS is a global provider of cockpit module assemblies for the auto industry. Now, the enterprise value is 4,800 crores, and the acquisition, the company says, is EPS accretive from day one itself. The revenue of SAS is about a little under 8,000 crores, which is 10% of Motherson's overall revenue. So it's a sizable acquisition. And even the EBITDA margins. Now, SAMIL, which is the entity which bought SAS, operates in margins of 6 to 8.5%. But the EBITDA margins of the acquired company is 11.5%. So perhaps the blended margins would rise as well. That's the expectation. The acquisition, though, will be funded through internal accruals as well as debt. And that's the only question that we need to ask the management. Remember, they're sitting on a net debt of almost 8,440 crores. Will they be taking on more debt? If yes, how much are they comfortable with? So all of that are questions that need to be answered. But I think this is a very good acquisition because currently 6% of Samvardhana Motherson's revenues come from electric vehicle space. And SAS, which is the acquired company, has a huge presence in EVs globally, in China, in the US, etc. So this will help increase their electric vehicle OEM exposure. Elara Capital put out a note where they said it will add about 12.5% to Samvardhana's existing FY24 EBITDA. So I'm going with green on the stock.
Okay, all right. Well, and you can also catch the top management of Samvardhana Motherson on Bazaar today at around 9:50 a.m. We'll quiz them on the rationale, the funding, as well as what are the synergy benefits. So stay tuned for that. But let's get to the auto ancillary space, which was buzzing pre-call. Well, there was a large trade that took place. Nimesh joins in to give us an update on how that battle is shaping up. Nimesh?
Hi, Nigel. So, the post-market data from Blockdeal, suggests a very interesting, details. So, one, it gives a confirmation that Minda has managed to acquire 1.9 crore shares, which is 15.6% in pre-call. Now, in terms of big sellers, Adios India Fund, Minerva Emerging Market Fund, and Stream Value Fund, they were the three large sellers in the block deal to Minda Corp. The funds who didn't participate in the block deal, the two domestic mutual funds, Quant Mutual Fund and Aditya Birla Mutual Fund, and Nomura Singapore. These three funds didn't participate. Now, the PHI Capital, which owns 5.7% in Precall and equally owns 5% in Minda Corp as well, that will be a key trigger as to which way the deal swings, is my understanding. The Precall management still has a support of close to 11.5% of institutional investors. Remember, in the interview on Friday, they said they have a support of 16%. So that's come down to now 11.5. If PHI Capital and mutual funds go in favor of Minda Corp, then Minda Corp can increase the stake to 25.3%, slightly over of 25%, which can help them to trigger an open offer as well. So there are a few things to watch out for, whether these funds will swing in favor of Minda. I believe Minda Corp is holding a investor call as well in the evening. And what is the next step for pre-call? These are a few things to be answered. But the block deal data do suggest that confirmation of Minda Corp acquiring 15.6%, and there is just 11.5% support for pre-call now from institutional investors.
Okay, and a lot of synergies, as we know and as we've been covering, between Minda and Precall, as they both operate in the same space. Precall has a large presence in EVs as well. But let's go across to Ekta now to talk about Cipla and why she's watching that one this morning. Ekta, over to you.
Thanks for that. Well, Cipla is in focus because the US FDA has issued 8 observations to their Indore facility, which was inspected in the month of Feb, ended on the 17th of Feb in terms of an inspection. The street is watching the nature of the observations because the Form 483 comes with a lag. The nature of the observations are not disclosed at this point in time. If in case it is adverse, then the street is fearing that one of the key inhalers, Advair generic, which is filed from this particular facility, could then be delayed. Remember that the Goa plant did receive a warning letter in 2019, and that eventually delayed a Brixon generic, which is a cancer drug, into FY25 according to analysts. INCRED says that both the products, which is Advair generic as well as a Brixon, could see a worse competitive landscape if in case they are launched 1 year later, which is in FY25. They've maintained a hold with a target price of 130, which they've reduced at this point in time. So for Cipla, we could expect the stock to be in the red only because of the number of observations that the Indore facility has received.
All right, Ekta, thanks very much for that. That's Cipla in focus. But more stocks with news flow. Surabhi is here with that list. Surabhi, hi, morning.
Hi, two sets of news for United Breweries, one negative and one mildly positive. The negative is that the company's MD and CEO, Rishi Pardal, has announced its resignation on Feb 16th. The other news flow is the Supreme Court has stayed the proceedings to recover the 750 crore penalty that was imposed by the Competition Commission of India. Now, just to alert, in 2021, CCI had imposed a penalty of 750 crores on the company on the charges of cartelization, and in December 2022, NCLAT had upheld the order. Now, Supreme Court has agreed to hear the company's plea against the CCI penalty. Now, the decision can go either way, but for now, this penalty has been postponed. Next one on my radar is CRISIL, where the company has reported its Q4 numbers, and they were quite good. The revenue is up 16% at 822 crores, and the PBT margins have remained constant at 25%. Their rating services revenue growth was subdued, up only 9%, and the margins came in at 40% versus 41% same time last year. Their research and analytics division, that has led to most of their revenue growth. There, the revenue was up 26%, and the margins have expanded by 300 basis points at 22% versus 19% same time last year.
Okay, thanks for that, Surabhi. Well, Sonal joins in as well to tell us about some more stocks in the news. Morning, Sonal.
Good morning, Nigel. Well, a lot of order wins that we got over the weekend. Let me start with KEC because the company won an order worth 3,032 crore rupees. It's across their civil, transmission and development and cables business. Power Grid has been declared as a successful bidder for 5 projects under tariff-based competitive bidding, and this is to establish interstate transmission systems. So that stock is in focus as well. RITES has secured a new EPC work. This is worth 76 crore rupees for provision of EI-based automatic signaling in Dholpur Gwalior section, that's in the Northern Railway section. Penar has won orders worth 851 crore rupees. It is across various segments, including the likes of railways, tube, steel, inland container depots as well. Supreme Industry is in focus because they finally commissioned their Cuttack facility. They had indicated in Q3 results that will happen soon. The initial capacity is 16,800 tons with a capex of 90 crore rupees. Once all the machinery is set, it can reach to levels of 43,200 metric tons as well. And this unit would manufacture plastic piping products. So these 5 stocks on my radar today.
Okay, thanks a lot for that. Well, here's a quick recap then of our top stocks in case you missed out on any of them. Stocks with positive news flow. There's Samuel or Samvardhan Motherson. There's Precall, CRISIL, KEC, Power Grid, Supreme Industries, Penar Industries and RITES. While stocks with negative news flow, there's Cipla as well as United Breweries. But as we were telling you earlier, there's a big drop in crude. Brent crude prices are now, I think, back to $83 a barrel. All this hawkish Fed speak has resulted in some concerns about consumption and demand. Manisha Gupta is joining in for a roundup of all the action that took place overnight. Manisha, good morning.
Thank you for that, Sonia. Well, yes, the crude oil prices have declined by 5% in the previous week, and this is, as you said, hotter than expected. U.S. data has fanned concerns of high rate hikes going forward. The U.S. crude inventories also are the highest since the month of October, and in addition to that, the U.S. will release 26 million barrels from the SPR as well. And not just crude, the U.S. natural gas prices also are trading at a 28-month lows, and we've seen the prices decline by 10% in the previous week for this one as well. Higher than usual inventories and mild weather seem to be weighing on natural gas prices also. Same reason why you have the heating oil prices trading at a 1-year low. Even the U.S. gasoline prices are trading at a 6-month lows right now. So overall, energy pack continues to be in the negative today.
Okay, Manisha, thank you very much for that. We'll take a quick commercial break here. We get chatting with Anand Tandon, of course, on markets, his thoughts on where he sees things going. And, of course, we'll also have the Chief Executive Officer at Finolex Industries. We reported the third quarter numbers and we speak with them about the quarter gone by and the quarter we are in. Stay with us.
Welcome back, folks. Hope you're having a good morning so far. Looks like the bulls are going to have a decent morning. The SGX Nifty is ending, or rather starting in the green, up about 44 points. So that's high point of trade right now. We have market expert Anand Tandon joining in to give us a sense of which way things could go. Anand, good morning. If you map the month gone by, so far, at least in the 20 days of February, the stock that has done the best on the Nifty is Tech Mahindra. And of course, we do know that there is a change of guard happening. CP Gurnani steps down at the end of the year. Valuations are also inexpensive compared to peers. Is this a good time to be adding, some of these stocks to your portfolio?
I think it is. I mean, frankly, there has been a lot of skepticism about tech, and many of the funds have gone underweight over the last quarter. And you can see that tech has been one of the better performers, not just Tech Mahindra, but in general has been one of the better performers in the last few weeks. Two reasons, I guess. One is that, the cost takeout deals that one has been talking about have started to show up. So even though budgetary allocations may be a little iffy even today, the reality is that, cost takeout deals are as good as any in terms of trying to show top line. They may not be as good in terms of margins, but it will work itself out over the next few years. And the second is, of course, the fact that there is a possibility that you may actually get more business coming our way if the US actually slows down even more considerably on the tech side, as seems to be possible given the kind of layoffs we have seen. So a little bit of under ownership, reasonable valuations for some of the mid-tier companies, and the fact that the situation may not be as bad as the market expects means that while there may not be a runaway rally in the tech stocks, at least from a market perspective, it will at least be a market performer, if not mildly outperform.
Anand, hi, good morning. Two sort of acquisitions, right? I mean, one an attempted acquisition, the other one, of course, has gone through. And both in the auto-ank space. One is, of course, this Minda Corp pre-call business, which I'm sure you've paid attention to. I don't know if you have any thoughts on either of the two names. You've tracked them. And the second is Motherson Sumi. Motherson, the company which is acquired, which made it's a large, sizable acquisition. So just wanted to get your sense on both these names.
Well, Precall, I think, has been trying to get itself acquired for a while in terms of the fact that, they went through a very bad patch a few years ago. Then there was a change in the top management, and after that, the attempt was to try and put it back on its feet. I think to that extent, an acquisition always made sense. For Motherson, that has been the growth method. They have been acquiring companies. It has always amazed me at the speed at which they are able to acquire and assimilate without seemingly any cultural issues. Also, the fact that they seem to be the preferred choice for most companies to try and amalgamate with. But, so I'm not surprised about this announcement. And given their track record, one has to kind of believe that, it will also do well for them, especially since they are saying, as I heard you report, that it is, positive for the EPS, and therefore you should not have any negative impact overall. But whether it is, one has to look at whether what it does for the ROE as such. But again, as I said, the fact that they've been able to reduce costs more or less in almost every acquisition that they've taken and increase margins usually means that, that is something that will benefit their bottom line finally.
All right, Anand, request you to hang on. We just invite our first management today on the show. PVC pipes maker reported a weak set of numbers for the quarter 3. That's due to a year-on-year decline in pricing. However, on a sequential basis, there was an improvement. The company we're talking about is Finolex Industries. Mr. Ajit Venkatraman, the Chief Executive Officer of the company, joins us on the show. Hi, Mr. Venkatraman. Good morning and thanks so much for joining in. Well, I want to talk about PVC pricing, the spreads. But first up, let's focus on volumes. You had a very good volumes reported in quarter 3. But how is the quarter 4 shaping up? That's normally the largest quarter. And on a year-on-year basis, in comparison to quarter 4, FY22, do we expect some growth? The same quarter last year, you did around 79,000 tons. Go ahead, sir.
So good morning. Yeah, quarter 3 was absolutely a fantastic quarter for us in terms of volumes. We had probably the highest volume Q3 ever. And that is typically we have Q4 and Q1, as you rightly said, as the strong quarters for us. Based on the Q3 performance in FY23, I expect that the Q4 will be a little bit more muted because we have seen significant growth in volumes for the industry itself in Q3. So Q4 is going to be a little bit more muted than the previous year.
Than the previous year. So last year did around 79,000 tons. So you're saying it'll be a little lower in comparison to quarter 4 last year because of the blockbuster quarter 3 that you had?
About the same, but we will not be able to keep up with the Q3 performance. That's what I mean.
Right. No, that's par for the course. So, if I just plug in the numbers, at 9 months, you've done around 2.2 lakh tons. So you'll end the year at around 300,000 odd?
So we should be closing above the pre-COVID levels. We are looking at around 300,000.
Okay. Mr. Venkatraman, good morning. That is on the volumes. I wanted to understand a little bit about the margins as well. How long before the margins come back to the normalized levels of FY22? And can you tell us what exactly was the inventory loss that you incurred in this quarter gone by?
So FY22 was an anomaly. That's because of the PVC prices. And for the last couple of years, we have seen the PVC prices being very volatile. And we had the highest volume prices almost to the extent of $1,800 per metric ton in FY22. And that has come down significantly to the $900 levels this year. And we have seen the PVC prices stabilize from December onwards. So we expect that the prices will be stable going forward and the margins will be coming back to the pre-COVID levels.
Okay. So when you say pre-COVID levels, what are you looking at? I mean, the margin band has been quite large, between 20% all the way to 30% as well. What will the margins be on an average in FY24? And I didn't get the inventory loss that you saw in this quarter.
So most of the inventory loss, as the prices were dropping during the course of FY23, we held a lot of high value inventory while the prices were going down. And in this market, prices typically passed on to the market, whether it is rising or falling. So we did take a huge inventory loss in Q2. And till about middle of November, we did take a loss in Q3 as well. So if you actually see the EBITDA, we closed at around 55 crores this Q3, as against a loss of 47 crores in Q2 FY23, and this is against a profit of 69 crores in the pipes and fittings segment, which I'm talking about. So you see that we are coming back to the normal levels in terms of the pipe and fitting. The variation which you see is essentially due to the resin business. The resin business has a significant amount of movement. Against Q3 profitability of 178.
No, what about the margin band, Mr. Venkatraman? What could it be?
In terms of margin band, we typically see a normalized margins of about 10 rupees per metric ton. 10 rupees per kg in the PVC business, the pipes and fitting business, and that's what is normal margin.
Okay, got it. I mean, it's a commodity business, so you have to kind of live with it. Mr. Venkatraman, good morning. Good to have you with us here. Just a quick word on demand as you see it through calendar 2023, both on the agri side and non-agri side. It's also, a year littered with lots of state elections. I'm assuming that it does that. I don't know if that becomes a factor for your on the agri side. Then you've got elections next year. Just give us a sense.
So in terms of volumes, we have seen agri segment growing at the normal pace. And we expect that the plumbing and sanitation business is going to have a much accelerated growth. Overall, in the pipes and fitting business, we are seeing a CAGR of almost 15% over the past 5 years. And we expect that to grow in the same rate in the next 5 years as well. But we expect the plumbing and sanitation business to be at a much accelerated growth rate than the agri segment.
All right, Mr. Venkataraman, final question before we let you go. Actually, just got two questions. You gave us a per kg profitability, but I'm reading a brokerage report and they are saying that they're expecting Finolex Industries to do margins of around 15 to around 16% in the coming year. That's FY24, since we have stability on pricing now. Point number one. Point number two, the street is very excited. Are the Finolex promoters going to, call a truce? Is there some kind of, settlement that could come about? Because we have seen Finolex Cables as well as Finolex Industries, they'll be in focus on the back of that. So two-part question, go ahead.
So in terms of at the promoter level, the company is quite away from the dispute which is going on. The conversations are happening as we speak. And we don't get involved in that aspect of the business. The business, it runs independently of what's going on at the promoter level.
Okay, and what about the margins? You gave us a per kg margin, mid-teens. Is it gettable?
See, we are, mid-teens is possible, but that all depends upon the split between the agri and non-agri segment. Agri segment typically is at a lower margin between 8 and 10%, whereas the fitting and sanitation business is at the range of about 10 to 15%. It all depends upon the mix. If you look at quarter three, majority of the demand for Finolex came from agri segment because of the spurt. Again, when the split moves towards plumbing and sanitation segment, the margins will move towards that. And our concerted effort is to focus on the plumbing and sanitation segment. We are already strong in the agri segment.
All right, we'll leave it at that. Thanks a lot for joining in. We have plenty more questions for you, but I guess we'll leave that for another day. That's Finolex Industries talking about the volatility in PVC prices, but demand continues to be quite strong. Anand Tandon is still with us. Anand, this entire space, do you like it? And any thoughts on whether there is more, whether the risk reward is favorable for investors at this 180 price for Finolex?
I don't actually like the space too much because there are too much variability in terms of what the input-output prices are, the spread in between and so on. I find it difficult to predict any of those. The kind of commodity side business that I kind of stay out of, that doesn't necessarily mean Finolex has anything wrong with it, just my own preference of not wanting to be in these kind of commodities.
Okay, all right, Anand. Stay on. We'll come back in a bit. We'll take a quick break. On the other side, we'll connect with Sudarshan Sukhani and Mitesh Thakkar for some technical trades. We'll also get a commentary going on a couple of sectors like cement, so do stay tuned in for that.
Okay, well, welcome back. There are flashes at the bottom of the screen with regards to Hindustan Zinc. The government has reiterated its decision to acquire the Vedanta's international sort of aluminum business, which Vedanta had announced they will. Our colleague Timsy had reported this earlier, saying that the government is opposed to it. I remember Timsy had also said that the government had, before the announcement was made publicly by Vedanta, the government had expressed its view to Vedanta, but, the company went ahead and announced this in any case. But this is a reiteration from Hindustan Zinc saying that the government is against the acquisition, which was largely considered to be quite overpriced for what it brings. What would it bring to the company?
Yeah, just to give our viewers a quick background, Vedanta, the group had proposed that in fact Hindustan Zinc will go ahead and buy International Zinc, which is held currently in Vedanta, and they'll buy it at a valuation of more than 10-11 times EV upon EBITDA, which is very, very expensive. That would drain Hindustan Zinc of all the cash in its books. In fact, it would become net debt. So the question mark was, is the government of India on board? Sapna had told us a couple of weeks ago that no, she believes that, her sources indicated that no, they were not on board. To give you a quick, the shareholding pattern, Vedanta holds close to 65% stake in Hindustan Zinc. The government of India holds close to 30% stake. So since government of India holds close to 30% stake, they're saying we're not on board. So that's why this transaction is unlikely to go through. There's only 4 to 5% in the open market, and out of that, LIC has 1% or 1.5%.
I think the rule says you need for significant these kind of significant decisions, majority of the minority to approve. So the government's go ahead and say so in the matter becomes important, but that's a story which is coming through. All right, let's get back to the market, more on Hindustan Zinc in a bit, but Anuj is here in the studios to run us through what he's making of things as we kick off another week. And Anuj has come back from a nice, beautiful 2-day break, so things are looking good, Anuj.
Things are looking good, Prashant. Thanks. Actually, most of the times look good, right? It depends on how you view them. Look, the market, of course, has been a bit weak over the last couple of days. In fact, from Thursday high, the Nifty has fallen about 200 points and it's taken the Nifty back in the range, which we all thought by Thursday looked like the Nifty was breaking out from. Need to see the Nifty IT's behavior from here on, because Nasdaq on Friday showed a very interesting thing. It was below the 10-day exponential moving average, but defended the 20-day exponential moving average. And Nifty IT is still about 250 points higher than the 10-day exponential moving average. And I talk about it because it's clearly the leader of the market despite Friday's move. Bank Nifty remains the weakest link for the market. And let's see, there's some respite from the US market because bond yields were down. And today the US markets are not trading. So it could give a chance to Indian traders to have a sort of a field day. In terms of levels to watch, the Nifty's Friday low was exactly the 20-day exponential moving average, and it closed right at the 50-day exponential moving average. So those are the two levels to watch out for. On the Bank Nifty, we closed below some important levels, 10, 20, 50, and even the 100-day exponential moving average. And I think it's firmly been a sell-on rally index. Spoke about it on Friday as well. And the level to watch here is the 20-day exponential moving average of 41,575. It remains sell-on rally till that level is taken out. And if that's crossed, then maybe it sees some short covering. But till then, it's a sell-on rally.
Okay, Anuj, thanks a lot for that. Have a good one. Well, Sudarshan Sukhani of Technical Trends and Mitesh Thakkar of EarningWaves.com joins in now. Gentlemen, morning to both of you. Sudarshan, that's the thing, right? I mean, the Nifty has been facing resistance at 18,000 for a while. Do you reckon that even this week, there's F&O expiry, so it assumes importance, but do you think it could be a sell-on rally week for the market? And what are your thoughts on today?
Yeah, good morning, Sonia. I don't see this market as a sell-on rallies, at least not for the initial few days. See, the Nifty broke out of 17,900 and obliged us by going to its pattern target of 18,100. So that was a trade that was initiated and completed both. Now on Friday, when we saw this large decline, we must remember that the market, the Nifty, stopped at 17,900. What happens really is that when resistance is broken, that resistance becomes support if the market decides to go through a correction. So Friday's decline could easily be a correction in the strong up move that we saw. So I would be a buyer so far as 17,900 holds, which really means that if you see the Nifty going above it and trading above it, I would be a buyer with a tight stop just below, let's say, at 17,850. So my sense is that we could again try to make a race towards 18,100. Then we'll see.
Okay, all right, got that, Sudarshan. Thanks for that. Mitesh as well as with us. Morning, Mitesh. How would you approach the index?
Morning, Ed. I think for me, it's still a market which is basically contracting and range bound. The reason behind that is that the Bank Nifty, which enjoys significant weightage, is mildly negative, while the IT and the other packs are looking good. And the Nifty chart itself is showing signs of declining volatility. So I think we will do 17,800 to about 18,150. And yes, in the short term, I think we may be slightly positively biased, hoping that the upper end should be tested soon. But otherwise, I don't think there is a signal of a decisive trend breakout or breakdown happening. So trade with ranges, trade with small stop losses. Declines to 17,850, 870 for me are buying chances with a stop below 17,800, and around 18,100, 150, I would be wanting to book profits and even explore short.
Okay. Individual stocks, what do you have for us, Mitesh?
I have a mix of buys and sell calls. Two banking names on the sell side. That's IDFC First Bank, where I recommend selling with a stop just above levels of 57 for targets of 53. And Federal Bank looks corrective after a long time. So that's a sell with a stop at 130 and look for short-term targets of 121. On the buying side is Larsen and Toubro. Keep a stop below 21.95. Look for targets of 2,300. And Asian Paints, after a good correction, is now showing signs of an upward bias. That's a buy. Keep a stop below 2,800. Look for targets of 2,905.
All right. And Sudarshan, how about you? What would be on your buy and sell list this morning?
Well, they are mainly mid caps because the Nifty is a little, well, let's say laid back today and for the next few days. We're only looking at a mild up move. Apollo Hospitals is a buy. You know, it went through, it's a perfect chart for buying, went through a deep correction, then started building a base and has broken out of that base. So there's a buying opportunity here with a stop under 4,500. Berger Paints is a buy, same pattern, deep correction, sideways movement, which essentially is a base building exercise. And now it's not broken out, but it should break out on the upside. So that's a buy in anticipation with a stop under 558. Canfin Homes is my only intraday short. The stock now seems to be suggesting that it's exhausted on the upside and at least a correction is coming. So it's a short with a stop above 595. And finally, Tata Steel is, not really building a base, but it's giving signs that maybe it can see an up move, at least a short-term up move. So that's a buy with a stop under 108.
Okay, all right, gentlemen, good speaking with both of you. Appreciate you joining in with that perspective. We'll take a quick break here. We'll come back with the pre-opening rates. And of course, we also have Naveen Sahdeo of Nuvama Wealth to discuss the outlook for the cement sector. There's a pack which was buzzing on Friday. We take that forward with Naveen in a bit.
Get the